All right, hey guys. So I had a request today from a member to take a look at Stratis. So I've got Stratis here to Bitcoin. We're going to look at it both in against Bitcoin and to the dollar, if I can get it done in time. Now, as with any coin that you're considering trading, I always suggest you come over here and check its stats if you haven't traded it before. Strat's this is a really strong project. We're very high on the CoinGecko scale at 66%. Market cap, almost 650 million. So this is a major coin. A lot of volume coming in of late, and this is a strong project. But if you wanted to read a little bit more about what they're all about and do a little of your own fundamental research, this would be a good place to start. Back to the chart. So straight up and then straight down, right? So and then here was the ICO. This by the way is why I don't trade ICOs. But putting that aside, is it a pump and a dump? Whatever it is, it's certainly here. This, there's really no Elliot count there, but you do have some technical trading on the way down. Remember, algos, they don't care long or short. They're just it's software that's written to do particular things. So we can look at that and see how the algos have traded this on the way down, and if we're at a reasonable spot down here, which doesn't have a whole lot lower to go. Here's zero. If this is a reasonable spot to be looking for new opportunities long. Now here I've got an 8-hour chart, so here's my Vegas wave, and we're just starting to come up and tickle the inside edge of it. We're not quite there yet, but let's just do a little bit of measuring here, because we're you can see this bar here. We're starting to see signs of some strength and some potentially renewed buying, but just checking it. So if I just do the same procedure that I would do with any coin, so if we go from my swing low here, we go up, you can see here's the 618, we go to, here's my negative 23, so there's the first algo target, and then here's the negative 618, so it's been to and through those, so they made money here. Having seen that, I'd go back and then I'd pull from this last pivot, and I kind of eyeball it and tell you. So here you can see from this last swing where they first took profit, then we go right back just as before. In fact, we do it twice. We double top here at just shy of the 618, and then here's their target here. That's the negative 23. So potentially you're at a spot now where they've taken everything they can out of the short side of it, and potentially now we start moving higher. So I guess my point here is that it's trading technically, and there's algo footprints all over it. So given that, if we look here now, is there any Elliot count here that would make sense? Well, this correction here is kind of interesting. So you can see, kind of an ABC. So if I were just trying to put a preliminary count on this, I would do something like this. Now this looks to me like we've got this kind of thing happening. So let's see, I got to do another degree here. So I am inclined to think we do this, and we're down here. Let me put that in a higher degree. So if I go to that, let's put that in a different color. So I'm inclined to think you've got a pretty substantial correction here. So this is kind of interesting here. We get this A, B, and then this double top here. Measuring that, looking for fib relationships, I'd pull here and then to here, right on it. And you can see we go right to the 618. If I have this tight, I think it was right on to the tick. Yeah, it is. So there's an A, B, right? So we knew as well that from this B here we had this confluence here. So we get the A, B, C. There's the 618 for that 3 wave. So you would have additional subdivision here. So you'd have this as an A, B, C again. I'll put that in a smaller degree. Let's go down so you can see it. We'll put that in white. So do you see what's happening there? So we have very technical trading. So we've got an Elliot structure here of some degree, and we've got the 618 here. So this was a perfect short. Now, as you guys know, if you follow me, I'm almost always looking for the long side of the market here. So the idea is, do we have a potentially established pivot to work from here that would make sense? And certainly based on what we're seeing here, we've got Elliot pattern, we've got fib relationships, we've got a technical correction, and now we're here a few ticks from the negative 23. So looks like maybe there's some movement here that's worth noting here as we're now breaking these prior highs. So we have potentially now we have a higher low and a higher high. So that's on the 8 hour. So I've got it below here. So where do I have it? So here it is on Poloniex on the hourly, right? So here's that low back here, and you can see now we've started to move technically. So from that low, first question is, well, can I get a decent impulsive or diagonal structure? And take note here, it was almost perfect. So if that's the one, we get a slight overlap here for the 4, suggesting we've got a diagonal, right? So that plays for a leading diagonal into a 1 wave. We come down, we get this somewhat technical, we get this little, here's our B, we get a very shallow C, but this is something we see consistently in crypto when the market gets strong, these shallow C waves. But, we're certainly not violating any Elliott rule set there. Now, of course, I've got the pitchfork on it. When I get 3 significant pivots like that, and you see we hovered in the box, in that 618, 65 box. So very technical. And then we pop in from here. Here's my favorite corner pocket trade, which was just textbook. So here's your corner pocket trade. We go right to the median line. So that right there, that's a nice little trade. I mean, one that I hope some of you guys know to look for those and that we caught that. So there's your first indication that, again, now algos are in, but they're trading from the long side. So with that 1 wave in, then we start to measure this, say, okay, now I've got structure here that I can really work with. So if I've got so here's my leading diagonal into a 1, I get my ABC into a 2, and now it looks like we're going impulsive. Well, if that's a 1-2, my expectation is that I'm going to get an impulsive wave count here. So it can't be a diagonal in the 3rd wave relative to this degree here in white. So here's my target, and all I'm doing is I've done many, many times before, and I've shown you, from the length of my wave 1 projected from my wave 2. Well, here's the first target right here, which we have just wicked. That's 100%. Of the wave 1. Here's the algo target. So we're to and through that, but I promise you algos took some profit there. So now we're to and through. So we can qualify this now relative to, well, actually that's the wrong degree, relative to this degree here, right, in white. So we've just gone a couple of ticks through 100% of the wave 1. So we can qualify this as a wave 3. Well, if that's a wave 3, well, that's good. That's good news here that we've qualified here, and we don't know that we're getting a little kickback here, and that's likely because the algo is taking some profit there. But where's the higher target, the more likely target, the more common expectation, and statistically where our wave 3 is likely to reach? We've got the 1618, 175 box up here. So right here becomes our hot box up here for that potential wave 3 of the degree of this larger degree in white. But if this is a 3rd, we're expecting subdivision into that motive wave. So here's my 1-2. We saw the 1 went right to the median line. We pull back to the outside edge. So here's the lower parallel median, and now we're getting even subdivision within that. So if I open this up, we can just, I guess the point I'm trying to make here is this is just trading perfectly technical. So I'm going to take some of this off just to declutter the chart. So there's our 100%. So we know, and we've got our box drawn up here. So let me take this off, and we'll go to the smaller degree. Well, from my low here to my 1, right? So there we go, right, take note, right right into the 61865. I can't, I've lost count how many times I've shown that to you guys. Well over 100 times. So we go right into that little pocket and boom, that's the reaction. So we get exactly what we always look for. We get a confluence here. We've got the lower parallel. So not only we have the lower parallel, so we had the corner pocket trade right to the median line. Bang. So now we come down to the lower parallel and we wick right into the pocket. So in effect, we get a second corner pocket trade. And where do we go in that? We go from that right to the median line, and now we're to and through. So potentially now we're having had a reaction there and gone through. Well, here's the negative 618. Here's the negative 100. So that's a contender for the algo target. And this reaction here is partially because algos that bought it here have taken some profit. So now, are we going to keep going? Well, we would do the same thing here. So let me take some of this off since we've established that. So if we're in a 1, 2, 3, we're going to now look at the Elliot targets. So from my low to my 1, projected from my 2. Well, where's my target for that third? That's right here. Right, there's the 1618, 175 of the lower degree. So our expectation is now from this 2 that we're heading to this as a 3, and look what that lines up with. Right, here's the upper parallel median line. So very, very technical trading. Now, do we get there? Well, we don't know yet, but that would be if you were long here. So people often ask me, what about taking profits? And my reply is, if it's trading technically and you reach a significant fib level or some sort of structure or pattern point, this is not a bad place to take a partial profit, right? If you're long from here, one choice would be to move your stop up here so you lock in some profit, because we don't know that it's going to keep going. We have a probability projection here, and we have pattern that looks like it's in play. We know algos are in, but we don't know that it keeps going. So one choice is take a partial profit here and move your stop from here now to this last swing low. That's what I would do. But I'm going to bank a little bit here. I want to reduce risk. I want to put some Bitcoin in my pocket, and then I want to lock in some profit here. So I'm basically in a risk-free trade. So, very, very good situation to be in. So I can let a portion of it run because I know I've got, on this degree here in blue, I've got this target up here. And now since we're to and through the 100, we get here's the 1272, the square root of 1618. That's a contender, right? I've really got nothing on the left here there's a little pivot there, but we're already through that. So nothing really telling me that it should stop. If I look at my oscillators, well, we're a little hot. Here on the hourly, we're a little hot. We could see a little pullback, because take note here now. Remember, it's waves within waves within waves. So if I've got good technical subdivision here, and here's my potential third here, well, I'm additionally going to expect, if I were to go down to the 15-minute, that I'm going to expect technical subdivision within the third. Waves within waves within waves. So here's my 1, there's my 2. Right, so here's the next 1618, 175, right, of the lower degree. Do you see that? So these become all potential targets of relative degrees. So the smaller degree, so potentially I have to get another 5 wave on this. That's how technically it's trading. So I've got a 1, 2, potentially a 3, 4, and a 5. I got to put that in a different color, and I got to take it to a smaller degree. So let's go to micro. Do you see that? So within this 1, 2, now I'm getting subdivision within that potential. So here's the 3 here of that, right? So that within that potential third wave, here's my 1, 2 of that third wave. And then within that, here's my 1, 2 within the next. So I've got 1, 2, 1, 2, 1, 2. That's as good. You can't get any better. That's exactly where you want to be. Because you're now in the third of the third of the third. Right? It's just just where you want to be. So it's going to be interesting to see how technically we stay here. But if you're long, that's your next potential target of this degree. Then the expectation would be, if we're going to go to that target, and that's our highest probability, then we'd be expecting something like this. So maybe we come back to the median line for the 4. We could go deeper, but I'd be paying attention to that, and I would certainly be paying attention to the wave 1s. highs. I want to watch what kind of reaction do we get there for potential invalidation. Right here, I don't have to worry about this one yet because I've already qualified here. Now, if we're going to stay technical and stay in this Elliot motive wave, well, then I'm looking for potential invalidation to tell me that something else may be happening. Because, again, we don't know for sure that it's going there. We're just playing the probabilities. So that's what to watch for. So I'm always looking for, since I'm in an impulsive move here, I'm in a third wave, and a third wave, and a third wave. I want to see these wave ones holding. I don't want to see those invalidating because right now, if I'm in a third wave here, I can't go into a diagonal. Now, technically, since this is a one, we had a diagonal here, right? So since we had that first diagonal, we could have another diagonal if we're in a 1-2, 1-2. This could end up as another diagonal. Technically, right now there's no reason to assume that. The assumption would be for a primary count is that we stay in impulsive motive waves. So that's what I see here looking at this, but very, very technical trading. So far, no reason to expect that not to continue. So if you're long, here's where my stop would be. Right? Note. Right to the Vegas wave. So I would be under the Vegas wave, allowing for that to come back down. If you want to put, the other choice would be just below the wave one on the assumption that we stay impulsive and we don't turn into a diagonal. So very technical trading here. This is a great. You got everything going for you here. You've got your Elliott wave count. You got algos that are in. You've got a good score on the CoinGecko. You got a strong project. I mean, everything is good here. So this is a coin to definitely be watching, to be tracking, and expecting it to continue to remain technical until proven otherwise. How am I doing? There's 16 minutes. All right, let's take a quick look at it against the dollar. So it's not exactly the same, but you had, here's your ICO, right? And then here's the pump and the dump. So, well, you can look at that and say, okay, well, pretty clear here that I've got a solid correction. So, anyone, just novice Elliott trader can see that. Well, so I got a nice ABC correction. How high did it go? Well, if I go down to my low here, well, we got some wicks through the 61865, but we know a wave 2 or a C wave, it can go up to the 786. So we just get some spike, stop running here before it goes back down. So likely on the larger degree, we've got an A and then a B, and then maybe this is our C down here. Put that in a larger degree. That certainly would play. We'd have that. Then of course, if I've got 3 pivots, I would, check the pitchfork, see if that does anything for me. Well, certainly, failure to reach the median line would be a tell, but you'd need to check that for the alternates and see. Let's see, if I go to a shift. Maybe, it's wicking around but it's not ultra technical. If I go to the modified shift, maybe that's a little bit better actually. So if I'm tight on these, you've got to do this. You got to get tight on them, especially when you change time frames. Let me put my little shadow on it so I can see those pivots. So that actually starts to look better to me. So given that, so A, B, so median line, we tick it right here, but then we fail to get back to it here. So that would imply that there's strength in the market, and you can see the reaction that we're getting here now. So, if there's any relationship between the A, the B, and the C, I would pull from the A, go to the B. Well, here's the 618. We're a little shy there. I've got it blown up over here, so let's look a little bit more closely. So looking over here, if I scrunch that out, you can see what I ended up with in a little more detail. So if A, B, C into a B, and then I get this 1, 2, 3, 4, 5, here's my here's my 786 from the absolute low. So you can see we wick 786. So if these are being corrective, that's a likely target for a deep correction is a 786. And in effect, you know, we double bottomed here. We didn't quite get there on this one, but you've got a nice double bottom here, right at the 786. You know, given these little wicks, and this here's the tick of the median line up, and then a failure to get there. Let's see. We can look at the relationship between 2 and 3 of that C wave. Well, we go right a couple of ticks. So, you know, again, algo tracks, a couple of ticks from the 50, but they don't get there. They don't get to the negative 23. Just because they sold it there, they don't always get their target. Well, now we're to and through, so they've reversed. That's what they'll do. They'll reverse when we break the 618. So here, given that, we can put a clean C wave count on that. So 4 overlapping the 1, so it's an ending diagonal. The failure to get to the median line here implies strength in the market. So if I open this up and go, okay, if I've got a potentially good low here, what's my expectation? I'm expecting to get an impulsive structure. You know, it could be a diagonal, could be a straight motive wave, could be just straight impulsive. Well, I get a nice 1, 2, and then again, I get another 1, 2. So I'm getting good subdivision, just like we saw in Bitcoin. So I've got the 1, 2, and then again, I get a 1, 2. And it looks to me like we've got a 3, 4, and we're putting in some sort of 5. Well, you know, how would that relate to fib targets? So let me declutter the chart here. I'll take some of this off so we can get through that. Well, same process, right, guys? It's the same thing over and over again. If that's a 1 and that's a 2, what is my target here? So first target for the 3 was right here. Relative to the larger degree here in white. Well, the first target for the 3 was right here, was between the 1618 and the 175. Well, you can see we get a little reaction, but now we're to and through. So next target is up here at the 2618. That would be the extreme for the wave 3. Since we're through this, and as that's a deeper retracement than this, my assumption would be that this is a good 1, 2, 3, 4, and that now we're subdividing yet again. So let's see, I'm on a 2 hour. Let's go down to the 1 hour. So it looks to me like we're subdividing in the 5th, right? So here's 1, here's 2, and then again, it looks like more. Again, very technical trading. So now we've just wicked the 272. So let's take that off just so we can look at all these degrees. So given that, okay, so we would take the 1 wave projected from the 4 wave. We're right in the pocket there. So note that. So we're right in that 618 to 175, which is extreme for a 5th wave. But you know, note we wick through the 1618. So we're in the hot box there. And then, but this doesn't look like it's done to me because it looks to me like we've got a little. Here's our little ABC. So technically 4 would be here. 4 would be over here, and then it looks to me like we've subdivided again. As I try and remind you guys, when it's really working, it's waves within waves within waves. So let's go down to, let's take that to white. Let's go to a smaller degree if we're getting good technical trading. So within that, that's why I think this is not done, right? Remember from the 1, 2 here, we've got a target up here in the 3 that would be up at the 2618. So we're getting this impulsive structure here. And then within that, we're getting additional subdivision. So if that's the case, right? If that's the case, we just get same thing every time. That's what I'm trying to show you. Okay, so if that's the potential third, so let's move these off. So potentially, so there's our potential third. There's our high probability window here on the smaller degree. That's the 1618, 175 from this 1, 2. Right, so we're getting all of these potential overlaps here that show you how technically this is trading, and there's no reason to assume that that doesn't continue until it fails, which is, as I often say to you guys, this is an unfair advantage in the market because you have the roadmap here. Each time it subdivides, the roadmap gets more precise. So now we can see that as we push here, we know the potential target here for the third. If that's the case, this may have to be relabeled. We could be going higher. Well, of course, with 3 strong pivots like this, we're going to put a pitchfork on it. So let's go up here. now I've got the shift from the other one, but let's go back to original recipe. So we're, here's our 100%. Well, take note of what happened here. Okay, guys, again, it's just the same thing over and over. Here's your corner pocket trade, right to the median line, right to the outside edge. We get a little shy of the median line here, so that that doesn't surprise me that we see the fallback here for the 4. It's a shallow 4. Let me take some of this off just to declutter it. So given that, well, let's see how we'd want that. So here's my 2 wave to my 3 wave. Well, we're right here in between the 23 and the 38. Very common target for a 4th wave, but note the inside one, the lower parallel to the median line. So we've got confluence here. We've got pattern, we've got structure, we've got geometry. Now we make the median line here, and we hover, as is often the case, as I've taught you guys. With regards to median line trading principles, if the market is not going to put in an exact pivot at the median line, as it did here, it's going to hover and make a decision whether it's going to continue to go. Well, now we're to and through the upper 100. Here's the 150. Here's the 200. So we could still be going. No reason to think this stops. Right? Do you see that? So here's that target for the 3rd. Then we'd be expecting some, a common Elliot target for the 4th relative to this 3rd to complete the 5th of that degree. So let me put that in a different color. So it's a little bit, well, let's put it in, I'll put it in yellow. Do you see that? So I've got 1, 2, 1, 2, 1, 2. Waves within waves within waves. That's the whole idea behind the Elliot principle. It's the fractal nature of it. They break into waves, which break into waves, which break into waves. Right? Do you see that? And then add the. So here was your algo target, right? So that was it's just the same thing, guys, over and over again, right? So that's why I always try and teach you that the key to this is consistency. It's doing the same thing over and over again. Not looking for the next shiny object. It's not, well, this isn't working. Let me try that. Let me try that. You get stopped out 3 times in a row. It's the discipline to come back and do the exact same thing again. Because as long as you're not stupid about taking too much risk and letting yourself get knocked out by any one particular trade, you can take the small hits. As I like to say, take the jab. You get in the ring, you're going to get hit. Don't take an uppercut to the jaw. You get a little stop, you get stopped out, it's just a jab. I can take a jab. You're not knocking me out with a jab. If you move a stop, move it to rationalize yourself into a trade. Oh, now I wasn't trading it, but now I'm a long-term holder. That's where you can get yourself in trouble, right? Crypto's so strong. A lot of people are getting bailed out, but this isn't going to go on forever, and the corrections are going to come. So, I'd rather take 5 stops in a row than move a stop and take an undue amount of risk in any one trade. Be consistent. I've shown you so much evidence. There's no possible way you could argue against this technical trading. You couldn't do it. I could just bury you in example after example, which is kind of what I'm trying to do here in every one of these videos. It's the same thing over and over again. If you maintain that consistency, you will have a very successful experience in the market. But most people don't have the discipline. They don't have the patience. They're trying something else because they got stopped out twice in a row trying this Elliot wave craziness. You don't like the Elliot wave? Just do just the corner pocket. You don't like the corner pocket? Just do the algo retracements. Being successful in the market is achievable. It is absolutely achievable, and it's an unbelievable time to be in the crypto sphere. Unbelievable opportunities here. Think about what you're doing. Don't take too much risk. Stay consistent. Learn how to do this. You'll have a good experience. I promise you. All right, guys, I'll wrap it there.